Welcome to BigONE Weekly News Update. I'm Gavin. As the year draws to a close, global financial markets have entered a familiar holiday rhythm marked by low volatility and subdued participation. The cryptocurrency market is no exception. Bitcoin edged up roughly 0.5% over the past week to trade near USD 88,600, while Ethereum declined about 2% to around USD 3,000. Solana underperformed further, falling approximately 2.6% to USD 126. Across the board, both trading volume and open interest have dropped toward their lowest levels of the year, a pattern consistent with the Christmas holiday period. Global markets remain resilient. In traditional markets, equities navigated last Friday's triple witching day with little disruption. Despite the expiration of a large volume of derivatives, U.S. equity indices avoided meaningful selling pressure. The S&P 500 rose 0.1%, hovering just below the psychologically significant 7,000 mark, while the Nasdaq gained 0.48%. The Dow Jones Industrial Average slipped 0.67%, and the Russell 2000 fell 0.86%. European equities continued to outperform, with the STOXX 600 climbing 1.6% over the week to reach a new all-time high. Bond markets were similarly stable. The U.S. 10-year Treasury yield ended the week near 4.15%, down roughly 3 basis points. In foreign exchange, the U.S. dollar strengthened for a third consecutive session, reversing earlier weekly losses. The Japanese yen weakened sharply, falling more than 1% to a 4-week low amid cautious expectations surrounding the Bank of Japan's policy outlook. Commodities saw renewed momentum, with gold and silver rebounding. Silver and copper reached record highs, while gold moved higher intraday, approaching its historical peak. Macro headwinds begin to fade. From a macroeconomic standpoint, recent developments suggest that near-term headwinds are easing. Following last week's rate hike, the Bank of Japan struck a dovish tone, helping to calm concerns over a rapid unwinding of carry trades. In the United States, payroll growth exceeded expectations with 64,000 new jobs added, though the unemployment rate rose to 4.6%, signaling a gradual cooling in labor conditions. Both headline and core CPI came in well below expectations, reinforcing the narrative of moderating inflation despite ongoing data volatility. Liquidity conditions also appear poised to improve. A declining U.S. Treasury general account balance is releasing liquidity into the system, while the Federal Reserve's reverse repo facility continues to support balance sheet expansion. Meanwhile, corporate share buybacks in the U.S. are restarting, and earnings pressure on major technology companies remains relatively mild this quarter. In the AI space, reports of potential Abu Dhabi backing for OpenAI at a high valuation have helped stabilize sentiment around the sector. Crypto markets under pressure, but not without hope. Despite a more constructive macro backdrop, cryptocurrencies remain under pressure. Bitcoin ETF flows turned negative again last week, reflecting accelerated selling linked to year-end tax loss harvesting. However, the transition from year-end to the start of a new year has historically served as a window for institutional portfolio rebalancing. With Bitcoin having underperformed many other asset classes this year, attention is increasingly focused on potential reallocation flows. Fund managers with target BTC allocations may need to rebalance portfolios as the quarter and year conclude, potentially driving incremental inflows in late December and early January. Similar dynamics were observed during the transition from late September to early October, a structural supply shift in Bitcoin. Beyond short-term flows, Bitcoin's longer-term price behavior in 2025 has been shaped by a structural shift on the supply side. A key factor weighing on performance has been the sustained and systematic distribution by long-term holders, often referred to as OGs. As Bitcoin has evolved from a niche, anti-establishment asset into a mainstream instrument increasingly held by institutions, early holders have taken advantage of substantial returns to realize profits. Historically, peaks in the reactivation of long-dormant supply have coincided with major market tops. Over the past 2 years, roughly 20% of Bitcoin's total supply has been reactivated, generating persistent on-chain selling pressure. Importantly, this pressure now appears to be approaching saturation, leaving limited room for further large-scale distribution. Looking ahead, from distribution to demand. Looking into 2026, the supply of Bitcoin held for more than 2 years is expected to stabilize after a prolonged decline. This marks a potential transition from an OG-driven distribution phase toward a market increasingly shaped by net buy-side demand. At the same time, Bitcoin's integration into ETFs, banking channels, and traditional retirement vehicles such as 401k plans continues to deepen. Taken together, these developments suggest that while near-term price action may remain muted, Bitcoin's medium to long-term fundamentals are strengthening. As structural selling pressure fades and institutional access expands, the groundwork may be forming for a more durable demand-driven market in the years ahead. Join BigONE today and take advantage of the growing cryptocurrency market.